Most buyers only focus on their mortgage payment, but they don't realize this isn't the full picture when it comes to your costs for owning a home here in San Diego. My name's Scott. I'm a local realtor here in San Diego. I help buyers, sellers, and people moving to San Diego. My goal in this video is to make sure that my clients are making informed decisions and that they have all the information up front before they make a decision to buy. So let's talk about that today. Section 1 is going to be the obvious costs. Your obvious costs are going to be your mortgage payment. Your mortgage payment is made up between your payment, your property taxes, and your insurance. Your payment is split into two sections. You have the interest portion, which goes to the bank, and then you have the principal portion, which reduces your loan balance each month. Your property taxes in San Diego and California are generally going to be about 1%. There's some additional local taxes that usually increase that a little bit more. So you factor in a little bit over 1% of what the purchase price of the home was. And then obviously your insurance can vary greatly depending on the size of the home. It could be more if you are in a high fire zone or if you're in a flood risk area. But your basics of your mortgage payment is going to be your principal and interest, your insurance, and your taxes. Section 2 is going to be maintenance. If you have never bought a home before and you've been renting for a while, this can oftentimes throw off first-time home buyers. If you're accustomed to renting, you're used to your landlord paying for all the maintenance. Anytime something breaks, you call up the landlord or the property manager and they send out a handyman or they send out a contractor to get everything fixed for you. When you own a home, you're the owner. You're responsible for the maintenance. So it's important to make sure that you're setting money aside every month or that you have some money already set aside to cover things like a water heater, a leaking roof, issues with your heater, your air conditioning, landscaping. Stuff wears out and breaks over time. So making sure you have money set aside to be able to pay for regular maintenance and upkeep on the property is very important. Section 3 is going to be your HOA fees. Not all homes are going to come with an HOA fee, but some homes will. So if you are looking at buying either a condo or a townhome or a single family home that does have an HOA fee, make sure that you're diving into what exactly that HOA fee gets you. Don't just look at the fee by itself and compare all the fees. Well, this one's higher than this one, so this is a better deal. Make sure you're diving into what does that HOA fee cover. Lower HOA fees might just cover the basics, such as if it's a single family home, it might cover the community pool and some basic landscaping. If it's in a condo or a townhome, it might cover a lot more. Generally, those HOA fees are going to be higher, and they might cover things such as exterior maintenance, so like the siding for your condo or your roof. If there's any issues that arise, the HOA is going to pay for those. Sometimes utilities are even included. So a lot of times in a condo association, your water, sewage, trash, those fees can all be lumped into your HOA as well. So make sure you are not just looking at the actual figure. Well, this one's 300 versus this one's 400. I want the lower one. Actually dive into what is that HOA covering, and is it paying for any additional costs such as utilities that you would have to pay for outside of that anyway if you didn't have an HOA. So just make sure you're doing a deep dive and you're going into the specifics as opposed to just looking at the monthly number. Section 4 is going to be your upfront costs. A lot of buyers think that this is just their down payment. They think, well, I'm putting 20% down or 10% or 5%, or if you qualify for a VA loan, you can even do a 0% down. But it's not just the down payment. You're looking at additional costs such as your loan costs. There's costs associated with generating that loan for your mortgage. There's escrow costs. Escrow is the third-party neutral company that manages the transaction. You're going to have to pay for an inspector to come out and inspect the property. You'll have to pay for an appraiser. The bank's going to send an appraiser out to make sure that the property is worth what you're paying for it. If you're a little tight on funds for closing, I have been able to get sellers to credit my buyers. So what that means is when the property closes, the sellers kick in some extra cash to help the buyers out with their closing costs. I've been able to negotiate that for some of my buyers. So if you're a little tight on cash, there are some ways we can work around that, but just know that those are costs that are going to need to get paid, whether you pay them or whether we negotiate the seller to pay for them. If you have any questions about that, feel free to reach out to me. I'd be happy to chat through that. Section 5 is going to be your ongoing costs. Most costs don't stay fixed forever. Going back to Section 1, the mortgage payment, your principal and your interest will stay fixed for the life of your loan. But your property taxes are going to increase over time. Same thing with your home insurance. Your home insurance is going to increase over time. So just make sure you're factoring in those two costs are going to go up. You also have your utility costs. Utilities are generally going to get more expensive over time. Make sure you're factoring in those additional costs as you look forward and you budget out into the future. Section 6 is the good stuff. If you made it through those first 5 sections and you're thinking, why on earth would I want to buy? Section 6 is why you want to buy. When you own your own home, you get appreciation and equity buildup. I've talked about in past videos how equity builds on both sides. As you appreciate, as the property value appreciates, you build equity. And as you pay your loan balance down, you build equity. So you're building equity in 2 different ways when you own real estate. There's also just the control. You control the home. You don't have to have a landlord telling you what you can do and what you can't do. You can add on a bedroom. You can add on a bathroom. You can paint your house pink if you want, subject to the HOA rules if you have one of those. And it also just gives you stability. You don't have to worry about your rent increasing. You don't have to worry about the landlord giving you notice to move out because they're going to sell or they're going to renovate. It's your home. You get to live there. And owning real estate is an excellent way to build generational wealth and build long-term net worth. There's so many benefits to owning real estate, even the tax benefits, which we really didn't get into either. I have a lot of clients that once they own their home for a few years and they see the amount of equity that they've built, they want to buy more homes and they end up becoming real estate investors because they realize this is such a great way to build wealth that they want to own more real estate. If you're looking at moving to San Diego and looking at purchasing, or you already live here in San Diego and you're looking to either purchase for the first time or purchase an additional property, feel free to reach out to me. I'd be happy to run through your individual situation and your particular numbers, and we can see if buying would be a good fit for you. If you like this video, please like and subscribe, and I will see you in the video next week. Thanks.